Over the last few months, I've been geeking out on ancillary products. And so I have learned some really eye-opening facts, and I wanted to share them with you, not only to help you diversify, but also to so that you can better protect your clients as well. And so this presentation for ancillary products is specifically geared towards health insurance agents, but I do believe that almost anyone can benefit from learning these eye-opening facts. So why ancillary? Well, the first reason is the gaps in our clients' coverages are getting larger. So for example, CMS put out a notice that for next year, for 2026 ACA, the max out of pocket is going up to over $10,000. That's a lot of money. If someone had a medical disaster, it is very unlikely that they will have $10,000 just sitting around to cover their medical bills. And also right now, even Medicare Advantage plans are currently max out of pocket up to over $8,800 if they're a network, but if they go out of network, it's like over 13,000. So I don't know, with the way things are and the cost of living has increased, I don't know very many seniors that just have that kind of money laying around if they are just living off of Social Security. Number two reason, there is an increase of chronic disease. So cancer, heart attack, and stroke are the leading cause of death in the US, and medical bills is the number one reason for bankruptcy. So if we can help people with this, we can help knock out the number one reason they would need to file for bankruptcy. Also, higher client satisfaction. So studies have shown that if you are protecting your clients better, then you will have a 40% retention rate. And another thing too is if you have supplement plans, meaning, a trio med or a plan enhancer, cancer policy, then even if they found a job and they can get coverage elsewhere, then they will most likely keep the supplement plan. I just had one that is canceling their medical plan the end of this month because starting next month they could get onto group insurance, but they still kept their Allstate Trio Med with me. So technically, they're still my client. And finally, the number one reason is diversify. So we can see the writing on the wall. There's some major industry shifts, and it's not just affecting one carrier. When you hear about massive layoffs or offices being closed or carriers that are no longer paying commission, you have to remember that it's not just that one carrier. It's basically their way. A lot of times when they don't pay commission, it's their way of saying, no thanks, we don't want the business. Well, what happens is insurance brokers are going to just take the business to a different carrier, right? And that next carrier is going to say, well, we don't want the business either. And then they'll follow suit. And so this is just the writing on the wall. And if we diversify, then we're going to be stable and stay afloat. And that's why ancillary is a very important part of the health of your business. So what I'm going to cover today is the top 3 products that clients actually want. Also, I'm going to go over the approach that I have used. So I've been testing out different ways of offering clients these products, and I can tell you what works and what doesn't. And also some other products that can complement what you're already selling. The number one thing that people ask for is dental. And I have a confession. I used to think dental was a waste of money. And I was always telling people, well, if you're just doing cleanings, like 2 cleanings a year, then it's cheaper to just pay cash. Well, as a cost of those services have gone up, it's no longer the case. And the truth is, if you don't sell them this product, they're going to get it elsewhere. And so the reason is because people want dental and they actually expect it. So think about when you go to work for a really large company, they don't just offer you medical. They usually say, here's medical, and then here's dental and vision as well. The other thing I was thinking about is I've seen some dental bills and they're like thousands of dollars. A lot of them are more up there, like the same cost as an ER visit. And so I don't know if you're like me, if a client calls you and they're like, oh man, I'm stuck with this ER visit, you just feel really bad, even though if it's not necessarily your fault, but you feel bad that there's a gap in their coverage and now they have to pay for it. As an agent, it's better to protect themselves from having to pay this bill that's potentially the size of an ER visit. Also, I recently have done research and found the importance of oral health. So I was watching an Instagram video of an oncologist, and he was saying every single patient that he has, not one of them did not have some sort of oral infection. And when I further researched into this, I found that if you have periodontal disease, it could end up being associated to things like colon, lung, pancreatic cancer, cardiovascular disease. The reason is because oral bacteria, if it enters into your bloodstream, can cause inflammation. It causes inflammation of the blood vessels, and it could worsen pneumonia or COPD or rheumatoid arthritis. And it's one of those things that if your client doesn't have dental or vision, they just won't use it. And if they don't use it, then it could lead them to other things as well. So dental or vision, there's usually like either a standalone plan or something that's bundled with dental, vision, and hearing. And so usually if you need a lot of dental work, then the standalone plans are more robust, whereas the bundled plans, preventative care isn't always covered 100%, and it's going to be services covered at typically a lower percentage. However, if they need dental and they need vision and they need hearing, then the bundled plans are really popular and will ultimately save them the most amount of money. The difference is on the bundled plan, it's kind of like a bucket. They give you an X amount and they can use, the whole amount on dental 1 year, or if they don't need any dental services, they can use it on hearing or vision. Those are the main differences, and things you want to consider are, are there dentists in network? Because a lot of the bundled plans, you can go in or out of network, but on the standalone plans, if you go out of network, the coverage is much lower. Other considerations, how soon do they need a major dental services? If they need it right away, then you have to watch out for wait periods, because a lot of the standalone or even the bundle plans, the first year, the coverage isn't so great. And I usually tell them, I say, hey, the first year, you're going to hate this plan. You're going to ask yourself, what did Malia sell? Why did she sell me this crap? But you got to hold out, because after the 12th month, the coverage gets better. And the reason is because these plans you can jump on mid-year. And so they want to discourage people from just hopping on and then getting their major dental work done and then canceling afterwards. Another thing to think about is there is a trend of dentists that no longer accept dental insurance. You can look at plans that, regardless of whether they're in or out of network, it's going to pay the same. So the next thing, this was super eye-opening for me, is offering cancer and critical illness. Here's statistics. 1 in every 3 men and 1 in every 4 women will be diagnosed with some sort of cancer in their lifetime. So what does that mean for us as agents? That means 1 in every 4 people that we talk to will call you up one day and say, hey, I was diagnosed with cancer. The problem is we don't know which one. And so if our heart is in it to help people, then we can't pick and choose who we want to help, right? So the deal is you're going to want to offer this to everybody, because the chances of them being diagnosed with cancer is super, super high. And 40% of cancer patients will deplete their savings within 2 years of diagnosis. That's pretty scary. The average out-of-pocket, even with medical coverage, is $6,000 to $10,000 upon diagnosis. And then I was talking to a friend of mine who went through cancer treatment. She said that even after you're through with chemo, it doesn't end there. You're still having to go back to go for checkups and you have follow-up visits, just remember that if you're diagnosed with cancer, it's not just, oh, go through treatment and then it's done. Also, there is a lot of expenses outside of medical. So if you're diagnosed with cancer, then you've got to take time off work to go through treatment. Maybe your spouse has to take time off work to take you to treatment or care for your kids at home. So there's a lot of expenses if you're diagnosed with cancer that people don't realize. Even if you have the best plan possible, it doesn't necessarily cover all the expenses associated with it. Another thing too is I've heard that if you've had cancer, that treatment will deteriorate your teeth, your oral health. And so it's good to have something that will help you with dental. I also want to point out that Medicare, if you look up this brochure, there's a brochure that says Medicare coverage of cancer treatment services. On page 3, right here, I highlighted it for you. It says very clear, Medicare may have maximum payment amounts on certain types of treatments and services that may not cover others. So your provider may recommend that you get services more often than Medicare coverage. So Medicare traditionally is really good coverage. And the problem is, even if you have Medicare, there's still going to be gaps. And so there's different types of cancer and critical illness policies. There's the lump sum, where I personally like this because they just give you a lump sum upon diagnosis of cancer. They'll give you $15,000, $20,000 that you could spend on whatever you want. You could use it to pay for medical bills. You could use it to pay for prescriptions, like anti-nausea prescriptions are really, really expensive. You could actually use it to go to another country to get alternative treatments. I have family that went over to Germany and paid cash for something that wasn't available here in the US, which I 100% believe that it saved his life, because most people with his diagnosis pass away in a relatively short amount of time. And then there's also treatment type plans, which basically pays per service depending on the service. So the downside to that is that you won't necessarily be able to use that money for, like the lump sum. You can use that money to take a vacation somewhere. If your diagnosis is bad enough, you might want to take your family on that last hurrah, unforgettable vacation. Whereas the treatment type plans is just tied to the services that you have gotten, which may sometimes be better too, because the treatment types could end up adding up to be more than what that lump sum payment would have been. So top carriers is going to be Manhattan Life. That's actually my top carrier for now for lump sum critical illness or cancer plans. Also, Allstate has one. They call it the Trio Med or a plan enhancer, depending on the state that you're in. Aetna has a really strong cancer policy as well. And then Aflac. For those of you who sell Aflac, I personally am not appointed with them, but I've heard great things about them as well. You might want to compare the costs versus the coverage. So accident plans are very high claims rate here. If you have kids, you may end up, like boys especially. I think trampolines, accidents are the number one claims that I'm seeing personally. In fact, even homeowners insurance, they don't like it if you have a trampoline on your property for that reason. Over 35 million ER visits annually are due to unintentional injuries. And that's 35 million people who did not expect to go to the ER, but here they are. The average ER visit is $3,500. And accidental injuries are the leading cause of death ages 1 to 44. So if you're working with a client and they're in that age range, they definitely need an accident plan. And only 63% of adults said that they could cover a $400 emergency expense using cash or its equivalent, leaving 37% of people who would have to sell something, borrow money, or they just can't pay it if they were faced with a $400 emergency expense. If your client is in that age range, or if they have boys, young kids, then this is a no-brainer. So there's different types of accident policies, mainly the lump sum, or the indemnity. Indemnity is basically where it's based on services. You need an air ambulance, it pays this amount. You go to the ER, it pays this amount. You need surgery due to an injury from an accident, you get an X amount. The pros and cons, the indemnity can sometimes end up being, they add up to more than what the lump sum would have been. Whereas a lump sum, it's like a fixed amount that you could apply to your medical bills, regardless of like what services were provided. The good news is that there's no medical underwriting needed to get an accident plan. You literally can sell this to anyone. And your target demographic is between ages 25 to 44. So if they're in that age range, then that should prompt you to at least offer accident plan. I looked up the top 10 leading causes of death in the United States, and a really good chunk of it is something that we can actually help them cover. Number 1, heart disease. Number 2, cancer. Number 4, accidents or unintentional injuries, including auto accidents, falls, and poisoning. Stroke is number 5, Alzheimer's, and then kidney disease. We have policies that actually will help protect people from the medical bills due to these leading causes of medical emergencies. So how to present to people compliantly and effectively. So first of all, you definitely want to plant the seed during intake. So as you are taking in information, you're going to tell them upfront, hey, I'm going to build you and customize a plan to protect you. Bundling isn't anything new. If you go to a fast food restaurant, you're going to see that people are used to ordering, a number 1 or number 2 or number 3, which includes, a burger, fries, or a side and a drink. And so this is nothing new to them. And what you want to think about it is how we're kind of like their HR person. If you're working for a big company, you have HR to walk you through all your benefits. But if you're buying coverage on your own, you need someone that acts like an HR. So that's you. As the agent, you're going to not just show them medical, you're going to say, here's medical, but here's how you can cover the other things and the gaps. And what I do is when I go to present the coverage, I build it for them and I present it with the total cost per month. For example, if I'm showing them medical plan, they're under 65, not on Medicare, then it's medical and then like a critical illness, an accident, or trio med or plan enhancer, and then dental and vision. So those are like the basics, like the non-negotiables, right? Because you're going to have major gaps in that medical bill. Even if you went with a gold plan, a max out of pocket on a gold plan these days are like still $7,000. So most people, if they're healthy, they're going to want to go with the bronze plan to save money. And if you compare the bronze plan and you show them the bronze plan, a lot of times they'll say, well, what's the next step up? Because a bronze plan has, at least an $8,000 deductible, right? So most people are willing to pay a little bit more so they could have a lower deductible. If you do a bronze plan with something that covers that major gap and dental and vision, it's still cheaper than going with a silver plan. You present it with the total costs up front. You say, here's the total cost of the package I put together for you. And then to be compliant, you need to break down the costs. So here's the cost of your medical. Here's the cost of that supplement that will cover in the big gaps in the event you're injured from an accident or you have a critical illness such as cancer, heart attack, and stroke, or if you're injured from an accident. And then your dental and vision. Here's the coverage, here's the cost of it, and here's the total. I would say 90% of the time, if I offer it that way, then they will want it. It's simple for them. And it's like, oh, great, you built a package for me. Always remember that a third of the people will always say yes. They just say yes to everything. I'm probably one of those people. And then a third of the people will usually always say no. There's people that always say no the first time. And then there's that middle third of the population that just need more information in order to decide. But I would say from my personal experience, when I offer it that way, when I plant the seed during intake, the majority of them do want this plan. And it's not like you're selling junk. They see the need for it. They see the big, huge deductible. They see the big, huge max out of pocket, and they need something to cover that large gap. Do's and don'ts. So remember, make sure that you tell them, the breakdown. Tell them, hey, these are going to be billed separately. You're going to see three different transactions on your bank account or your credit card. You're going to see your medical, which is this amount. You're going to see the supplement, which is this amount per month. And you're going to see the dental and vision, which is this amount. Also, I've gotten to the point where when I'm running quotes for people, I can usually narrow it down. And once I narrow it down, I can usually add the supplement and present it to them on one shot, one call. However, not everyone is at that point yet. And it is totally okay for you to say, okay, I've gathered your information. Now I'm going to shop plans for you, do research for you, and build and customize a package that will cover your needs. Can I call you back in 15 minutes? Or can I call you back in 5 minutes? And no one will say, no, I need to know right away. So don't feel the pressure. Don't feel rushed to present something to them right away. Okay, so here are some sample bundles that you could present to your client. So if it's someone that's not on Medicare yet, they are under 65 and on the exchange or marketplace, you could do medical, an accident, and a cancer plan or critical illness plan. So you could do like Allstate Trio Med or Plan Enhancer plus dental and vision. If they are self-employed, they're going to want all of the above plus possibly disability and life insurance as well. And we'll talk a little bit more about the disability and life policies. And then Medicare, they will want dental, vision, and hearing if they're doing like a Medicare supplement plan, minimum 20,000 cancer policy, but you can actually go down as low as 5,000, which is really nice because you could fit anyone's budget. And it's actually not as expensive as you think. Home health, which I'll cover that later on, life and or final expense. So something really important is if you're working with a Medicare beneficiary, you need to stay compliant. So make sure you have the SOA signed and completed. And remember that if it's a non-health related ancillary plan, for example, life insurance, it's not health related, then it needs to be completed in a completely different appointment, like a different day. But even if it is health related, then you need to wait till after the Medicare portion of the appointment is complete to move on and talk about. Make sure that you stay compliant, especially with Medicare clients. So we're going to move on to other cross-selling opportunities because those top three ones were kind of like the non-negotiable. Like you really need to present those to all of your clients. And then here's some additional opportunities as well. Number one, disability. This is a huge one because the demand for it is really high. So for disability, there's a couple of reasons why you would want to offer it. Number one, SSA reports that 1 in every 4 of today's 20-year-olds will become disabled before reaching retirement age. So that's huge. And then the next thing is workers' comp only covers work-related injuries, which account for less than 5% of disability cases. Also, SSDI, they have really strict qualifications. So I'll give you an example. One of my best friends, she's an adjudicator for disability in Washington. And she told me that the guy that ran her whole department is a quadriplegic. So basically he had no arms, no legs, but he basically runs the show. And so the way they view it is, okay, if you could push buttons on a register, then that means you can work. There's no reason to grant you disability unless you are incapable of working. So that means if you were a surgeon, okay, pretend you're a surgeon and all of a sudden you develop tremors and you can no longer perform surgery. Well, the way SSDI works is they look at you and they're like, well, can you work at a gas station punching buttons on a register? Because if you can, then they're going to deny you. It doesn't matter if you were used to, a higher level income. It doesn't matter if you were used to making $500,000 a year. If you can legitimately work and you can push buttons on a register or be a Walmart greeter, then they're gonna deny your disability. And they get so many disability claims that automatically they're gonna deny it, whether it's legit or not, because they just get so many crazy claims. Even if they were to approve you, then the average SSDI benefit is like $1,300, which I don't know very many people that can actually live off of $1,300 a month. And so a good question that you can ask your client is, what is your biggest asset? Is it your house? Is it your car? Is it what's in your bank account? And the way you want to think of it is this way. If you had a goose that laid golden eggs, would you insure the golden eggs or would you insure the goose? And in this case, you're the goose. So your ability to make income is actually your most biggest asset. Also, if you're self-employed, if you have a self-employed client, they're definitely going to want disability, because in the back of their mind, they're always wondering, like, what if I become disabled? If I'm not working, then I'm not bringing in money. So I was personally raised by a single mom, and she technically was a 1099 worker, and she was always worried about if she fell sick or something happened to her and she was laying in the hospital, that there would be no income to come in and help support us. Biggest opportunity here is if you have a self-employed person. And you never know when a disability could happen. I had a Facebook friend and actually a neighbor a few years ago. They're super healthy, right? But all of a sudden they were attacked by a vicious dog. And in both cases, it took them down. Like, it took them down. And for my Facebook friend, she said that it's going to be like 2 years till she fully recovers. You just never know. You could take care of your health, you could eat right, exercise, and still something else could happen that caused you to have a disability or a chronic illness that prevents you from working. And during my live presentation, somebody did ask me, well, if Social Security will deny you, what makes you think that the disability policy will pay out? Well, the difference is the disability policy would actually pay out, even they have less stricter guidelines. So for example, in the case of the surgeon, if he can still work, Social Security is going to deny him disability. However, if he had a disability policy and he was no longer able to function as a surgeon, then that is means for the claim to pay out. Even like us as insurance agents, what if you started having massive migraines and it was like one migraine after another, which is actually pretty common, and it's debilitating, you can't work, then a disability policy would pay out, whereas Social Security disability would probably deny that claim. There's a couple options for disability. There's like the short term and then there's a long term. And generally the short term has a short waiting period for sickness. Usually accidents is right away. If you get injured from an accident and you become disabled, it's going to pay right away. Whereas if you become ill, there's usually a waiting period. Now, short term is going to be shorter. Long term is going to be longer wait periods. So it's usually when the short-term disability ends. Now, for example, I have a long-term disability policy on myself, and because I have residual income, I set my elimination period for really long, because I know that even if I end up in the hospital, I'm still going to get paid every single month for a period of time. Because I was able to get it to be a longer elimination period, then it was actually pretty inexpensive for me. So short-term disability is going to be usually just a few months of coverage that pays right away, and long-term disability is 2 years, 5 years, 10 years, or in my case, I set it so that I have coverage up until I turn 65. Benefit amounts vary too. And then the monthly max is a lot higher if it's a long-term disability versus short-term. The cost, obviously, for short-term is way, way less because it's not going to cover you as extensive. And then as far as underwriting goes, the long-term disability is going to be a little bit more stricter underwriting, because the payouts are going to be much higher. So sample carriers, Mutual of Omaha has disability. If you are appointed with them, you could run your own quote. Aflac, I don't write for Aflac, but I believe with Aflac, you can only buy it if it's a group policy. So if you work with a group of 5 people, then you would come to an Aflac person and say, hey, 4 or 5 of us want to buy this disability policy. I think they're one of the few carriers that will cover maternity. So that is the upside of Aflac. And then I personally have Principal. That's who my long-term disability policy is through. But the downside with them is that you can't just run quotes on your own. You actually have to email them. They run quotes for you and send you the quotes, which I really hate waiting on other people for quotes. Apparently, they're one of the more competitive ones for long-term disability. Other cross-selling opportunities, life insurance. Life insurance, I think, is probably the most important of all of them. It's probably more important than health insurance. And the reason why I think that is because worst case scenario, if the family goes through some medical emergency, the worst that could happen is they file for bankruptcy, which is devastating. However, if you have a family that the main breadwinner is all of a sudden passes away, then there's more than just bankruptcy at risk. So you're having to deal already with the loss of a loved one. So it's already hard to mourn for the loss of a loved one, but it's 10 times harder to deal with it when you have no money or you're broke. The truth is, about 40% of Americans would actually face financial hardship within 6 months, and 35%, like more than a third of people, would face financial hardship within just 1 month if the primary wage earner died unexpectedly. So I think life insurance is very underrated. I'm guilty of this, like not offering it as often, but it's pretty affordable. A lot of people don't realize that it's not that bad. It's like less than the cost of lunch somewhere. So a few analogies I found is the lifeboat. Life insurance is something that you hope you never use, but having it ready means your family won't drown in debt if the ship goes down. Another one I really like is life insurance is your final love letter with a check. So it's basically the insured is saying, I care about you and I love you so much that I even want you to do well. And I thought of what life would be like if I wasn't around, and I want to make sure that I take care of you even if I'm not around. There's tons of other analogies. The main thing is going back to the goose that lays the golden egg. Would you insure the golden eggs or would you insure the goose? And the goose is the income earner. So there's different types of life insurance. There's term life and then the permanent life. And I won't go into it with that much detail, but I'll tell you what the difference is with term, it's temporary coverage. It's a set duration that does expire. And at the end of that term, the rates will skyrocket. Whereas permanent, that premium is higher, but it's fixed for life until you die, which, none of us is going to get out of this alive. It doesn't ever go up. Term is actually lower premiums and you get typically higher face amounts, whereas permanent, because it's a lifelong contract, the premiums are much higher and the face amount is a lot lower. It's pretty straightforward. It's easy to understand. It's easy to write. I have policies on each of my girls. And I know it sounds morbid to have life insurance on your kids, but I have riders on it where if they become disabled or if they have a critical illness or something major happened to them, they can actually tap into that face amount, or even long-term care. They tap into that face amount and they can use it for things like long-term care, or they have a critical illness, they can use that money for that. And I wish that someone had done that for me when I was younger. I mean, obviously my mom was a single mom and she probably could not have afforded that back then, but it's one of those things that if you get it for your kids while they're insurable, then later on in life, they still can keep that policy. The premium remains the same. And if they're not insurable down the road, they could still just take over the premiums for it. So that's why We have it on our girls. Not something you like to think about, but you're setting up your kids for better protection, and so that they don't have to buy disability, they don't have to buy long-term care down the road, which can be really, really expensive. So pros and cons, I'm just gonna leave this here a little bit for you to review. You can hit pause because I don't want this video to be super, super long. Just hit pause, review pros and cons of each. A few carriers that I recommend is going to be like Banner, Pacific Life, Transamerica, National Life, who has a limit living benefits, John Hancock, Prudential. So you can either appoint directly with them, or I actually personally use Back9. Now, just so you know, if you use Back9, your commissions are going to be way less than if you appointed directly. But the reason why I like Back9 is because they have this quoting platform that people could just hop on, quote really, really easily and quick. It shops like, tons of carriers all at once. So you always get the best deal for your clients. And if it's a carrier that you're not appointed with, then as they take the application, then Back9's gonna get you appointed so that it's just in time, right before they issue the policy, you're appointed. So I really like that. And things change, like Banner wasn't the top one all the time. Pacific Life wasn't always the top one, but you'll always get the top most competitive. So you can assure your clients that you're not just shopping one carrier. The other thing is they have this link that you could include in the signature line of your email. And people could literally just click on that link, run their own quote, submit their own application. The policy is issued before you even have to do anything. I've had that happen. Over the last few months, I've already had like 2 or 3 people that literally I didn't have to lift a finger, and the policy was issued and I'm just getting paid on it. So home health recovery care, this is a product that I personally don't have a lot of experience with, but when I started researching it, I was super excited about it because what it can offer people. Here's the deal. 70% of Americans over 65 will need some form of long-term care during their lifetime. Based on, this is like in the Northwest area, the average home care liaison charges $42 to $90 an hour. And usually 53% of home health care are paid by family out of pocket. So a lot of times people don't realize that when you're recovering and you're stuck at home, you're going to need help with someone to come and maybe help meal prep for you, or do some light laundry, or do some light cleaning, or services that your insurance company is not going to cover. But the need is high. If you have someone caring, and I don't know, there's a lot of people that are caring for their aging parents right now. It would be super nice to have a policy that will help pay for a professional to come in and help the main caregiver a little bit of relief. You would think that this is expensive, but it really is affordable. And so here's a sample policy that I found through Manhattan Life. They have a home health recovery care. These are rates based on Idaho. So at the time I was doing presentation for Idaho agents. So this is Idaho. I do write across the nation, but I didn't run quotes everywhere else just to see what it looked like. But a male or female age 65, so someone that's just getting on Medicare, $43 a month for the deluxe plan. This is like the highest plan you can get. $43 a month, a little over $1 a day. And it doesn't matter if you're male or female. So age 70, it jumps up to $61 per month for the Premier plan, which is still not bad. If you're 70 and you're just now thinking of home health care, you'll find that this is not too bad. It's like $2 a day. But what I want you to pay attention to is that notice that most home health care, like, Manhattan, GTL has the same thing. They have this prescription drug benefit. And what it means is if your client takes a $10 generic, or takes a generic or a brand drug, then they can actually submit for reimbursement. So let's just say your 65-year-old male takes 3 generic drugs. It doesn't matter what they pay for it. They could pay $3 a month for it, or I don't know, $3 or free or whatever. But if they submit the claim, Manhattan's not going to sit there and say, oh, they paid $3 for that generic, we're going to reimburse them $3. No, they pay per prescription. So if you have 3 generics, then Manhattan's going to reimburse $30. which basically help pays for the policy. So here's the max benefit per policy per year on that. If you're on the deluxe, then the most you'll get reimbursed is $600, which that's pretty much paying for the policy. That's $50 a month. So you potentially can show your client how to get this plan for free. What's the catch? I did ask, what is the catch? Why aren't we selling more of this? The reason is because a lot of people end up buying this and they don't take the time to file for those reimbursements. If I were you and I sold this policy to a client, I probably would set up automation or automatic emails every few months to say, hey, are you actually submitting for your prescription drug benefit? And if you remind them and they actually use it, then you're really helping them get this policy for really cheap or free. International travel. I'm not sure if you're all selling this. I know that you aren't all, because I'm getting a lot of referrals for this too, is, you have seniors that are traveling a lot. They're traveling all over the world. So this is something that you can offer if you're not already offering it. A couple things to keep in mind. Average cost of medical evacuation ranges from $20,000 to $170,000. And I've heard that if you pass away overseas and someone has to bring your body back, it's super expensive to bring a corpse back and transport it. So that's probably where the $170,000 comes into play. Approximately 1 in every 30 international travelers will face a medical issue requiring attention. So the odds are kind of low, but it does happen. And over 80% of foreign medical facilities require upfront payment before providing treatment. So some of the plans will have a national or international network. Some of them just require you to pay and then get reimbursed. Roughly 1 in 6 travel insurance policies result in a claim, which is much higher than other insurance products. So just keep that in mind, that the probability of claim can be pretty high. For me, I don't write too much of these type of policies, but the ones that I write, I usually shop between IMG, Geo Blue, and Peterson International. IMG is like really quick, inexpensive. Geo Blue we found is better for people who need like long-term travel. So if you're going to be doing a lot of traveling and you don't want to keep buying short policies, you just want the policy for the whole year, seems like Geo Blue was more competitive. Remember that it's a lot cheaper for people on Medicare too, because if you're on Medicare and you have a supplement plan, then it'll cover you internationally. And a lot of Medicare Advantage plans have international emergency coverage as well. So these plans would be secondary in that case. So that's why it's so much cheaper for Medicare age people. Best practices, narrow it down to 1 or 2 go-tos. Don't get all crazy and be like, I have to know every single product out there, because if you're overwhelmed, you're just gonna not offer it. So zero in like, hey, I love the plan enhancer with the riders. That's my go-to. Now, the plan enhancer with the riders is not available in every single state. So for me, I do have to either do the Trio Med if I'm in a state like Idaho. But if I'm in Texas, I know that my go-to is going to be a plan enhancer with the riders. I don't even think about other products because that's my go-to. Same thing with dental. If you're like, hey, I really like Emeritus because it's super easy to quote, then that's your go-to. That's where you go to first. But if they don't take Emeritus, then, I'm going to look in other networks like Cigna or Aetna, Meriton, or Delta Dental. A lot of agents I've heard are scheduling mid-year reviews. So instead of waiting till AEP or open enrollment to go over all of these benefits with people, it's not a bad idea to do it during summertime when you're super slow. You could just send an email blast saying, hey, if you want to schedule a mid-year review, let's take a look and see if there's any gaps that we can fill in for you. Life changes. So here's one of my favorite things about being a health insurance agent is that we are the first to know about everything. We're the first to know when someone's pregnant. We will probably be told this news before family is being told. This does happen. And then the family member's like, you knew, but you didn't tell me. But anyways, we're really good at keeping secrets for that reason. If someone's about to buy a new house, someone's about to adopt a child, or they're going to quit their job to start their own business, we're the first to know. And so when these life changes happen, this is your prompt to discuss ancillary. Like, oh, you're starting a business. Well, most self-employed people really lean onto the disability product, because the problem with self-employed people is if you're not working, you're not making money. Oh, you're going to adopt an 8-year-old boy. Well, you definitely need to ramp up on the accident policies, because the number one accident for kids is like a trampoline injury. Our brain loves habits. So we're wired for efficiency. The point is, the more you do it, the more automatic it becomes to you, and you're going to do it without realizing it. If you're still developing those habits, then do things like leave sticky notes, or in your intake sheet. Make sure your intake sheet has a prompt that says, tell them you're going to build and customize a package for them. Ask them something like, do you know anybody that is going through cancer treatment right now? Does your family have a history of cancer? Also, write these policies on yourself, because here's the deal. If you don't believe in it, you're not going to be able to offer these to clients confidently. And I could tell you, every single one of the products that I shared with you today, I have on myself, or I have purchased it, except for the home health. The home health is the only thing I have not purchased for myself, but I probably will do that because it's super cheap. I gotta run the quote on myself, but run the quote on yourself. You're gonna see how inexpensive these policies are. And the cool thing is, once you have it on yourself, there's that like peace of mind knowing that, hey, if I get diagnosed with cancer, that I have a lump sum check coming to me that will help me get through. And then also stay compliant. Like, you don't want to get in trouble over an ancillary product. So especially if you're working with Medicare, stay compliant, always be transparent, break down the costs, quote the whole amount, the whole package, but also break down what the cost of each is. Other than that, if you have any questions for me, feel free to drop them in the comments, or you can always email me at Malia@customizeyourinsurance.com. Thanks for watching.